Hello friends, this is Martin from Secrets channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and then how we can plan for a better trade tomorrow. This is analysis from February 2nd, Wednesday 2022 tomorrow. Yes, that is the first budget since this Markets Tomorrow show has started. And what a volatile day it was. It was a inverted V and then a V. That's exactly what happened. As expected, market would obviously be volatile, and it gained 1%, plus more than 1% also. Let's deep dive into it and see what exactly happened. So pre-market analysis would be based on all of these patterns: price action, Bollinger bands, support resistance, momentum dividends, all of this. We'll look at the charts. We'll also have data analysis based on additional parameters that you see on the right side. We'll wrap up some actionables for the next day as well. So what does a candle looks like now? This is a hammer pattern, clear gap up, and there was a lot of volatility that occurred during the day, is clearly seen by the size of the wick. What a big wick size. That means market tipped big and then recovered. Same with Nifty also. It's not a hammer, it's a kind of a small body or a doji, you can say, almost like a doji. Not exactly a doji, little body size is a little more, but very small body is indecisive, right? Market is indecisive. Market is very volatile because the wick size indicates that. Nifty also, it is highly volatile. And hammer pattern, does normally hammer pattern, if it is comes on the bottom of a trend, then it probably may mean this is kind of a hammer. So the wick size length, but the body shape is not exactly that of a hammer, it has to be more smaller. But hammer patterns, if it appears the end of a trend, then it could mean a reversal. But this is in the mid of a trend on the upside, so it may not mean much. But now that this is bullish, indicating the wick size of the hammer indicates it's bullish. Bulls are there. The presence of the bull is what that recovery indicates. Same with Bank Nifty also. So what is that happening on? 237 points gained on a budget day, and the major event is over and closed with a hammer candle. Bank Nifty on to 530 points, 1.4% is up as compared to the previous close, and then a small body dodges as we are seeing. So intraday price action is interesting. Inverted V and followed by a V. So it's nearly Nifty and Bank Nifty. If you see 1.5 and 2% of gap up is what happened in the morning, and then followed by a dip of more than that, 2% and 3%, right? Then followed by a reversal of 2.5% and 2% respectively. That's exactly what happened. Inverted V and a V. Now this is the price action that you see. Markets gapped up, then tried to consolidate a little bit, then sudden big fall happened, and then sudden recovery also happened, and then it maintained the same level. So Bank Nifty also gapped up, then tend to consolidate a little bit, and then big drop happened in the mid afternoon, and then a recovery almost. Bank Nifty was not showing too much of strength, the recovery, as much as the Nifty had shown, but Nifty had clearly recovered everything it has lost in a matter of a few hours in the afternoon, right? Nifty could not recover exactly up till 38,800, but up till 38,600, 500 level it recovered, right? So that's the intraday price action. Now Bollinger Bands, look at this. This clearly indicates Nifty on the left side, indicates it's going to be a sideways movement as the bands are moving sideways, and it is highly volatile because the width is more. The Bank Nifty, on the contrary, you can see that there is a skews that is happening up, so that means it is going to be less volatile, and it is it is a sideways movement also, right? Now the close above the median has not happened in Bank Nifty, but Nifty, sorry, but Bank Nifty just closed above the median of the Bollinger Band, which shows Bank Nifty is obviously more strong. Making out of the support and the resistance levels, right? So the first resistance just to take out is the Fibonacci 23 retracement level, 17,500 to 17,600, that level for the Nifty. Above that resistance would be 17,800 and 17,850. That's very crucial because it's a major previous resistance from where it broke out. So that's crucial to clear that. After that, clear 18,000 is also crucial because it's a rounding pattern, psychological rounding number. Above that, 1800, 18,200, and 400 kind of levels, all-time high. Below the downside, the supports can be seen at 17,350, 17,400, good support. Below that, 17,200, 17,300, good support. Where it hit when it dipped today, and then below that, so 17,200, 300 is going to be a good support. So below that you have 70,000 rounding number, then below that you have 16,800 to 16,900, which is a Fibonacci 38 level on the Nifty. So right side you have the Bank Nifty charts where the support is seen at 37,700 to 37,800, that level, and that is gone. Then 37,300 and 37,400 Fibonacci 23 is the major support. Then 36,900, 37,000 is major support. Then 36,700, 36,300 to 700, that Fibonacci 38 is the major support outside. On the upside, the first resistance will be 38,000 and 38. No, 38,000 is actually it's actually not a support because it's not a full clean body. It's a the wick is when the support is seen at down below at 37,800 actually. So 38 could also be seen as a resistance, but the major resistance is coming at 38,500, right? They're exactly just close today. Then above that you have 38,900 or 39,000, that level, and then after that 39,500 levels, and then 40,000 levels. So that is the resistance of the upside and the supports on the downside. Momentum divergences, you can see that there was a bullish divergence, and it has already met the target yesterday itself. Yesterday itself, and today it went further up. So momentum was clearly on the sideways on the Nifty. Bank Nifty, look, it is closed over to the bull zones. So Bank Nifty, the momentum is bull zones. Nifty, it is still in the sideways, right? And it's sideways in the medium term anyway. Trend indicator Radix, showing that DMI positive is not dominating. The DMI negative is dominating still in the Bank Nifty. That's why it's in the bear zones, but it's having less strength of bearishness, right? So that's for it. But Nifty, see, it has already crossed over in the bullish zones, although with less strength. So trend wise and momentum wise, Bank Nifty is more bullish than Nifty. Chart price pattern wise also it's more bullish. Bollinger Bands wise also Bank Nifty is more bullish. Index, what happened? Look, it did a cool off and then settled 9% of cool off. Crush, volatility crush is what happened today. All the volatility that had built up in the last several days got crushed today at 9% fall and settled below 20, which is cool. 90 more 93 is implied volatility, and 74.73 from 86 kind of levels, it has cooled off 5% also. Right, so that's what exactly the volatility crush is what we have seen today, right, on a major event day budget. So the 15 to 21 level had broken off and it shot up to hit even 24 kind of levels. Now it has cooled off to 20 levels, but caution need to be there if it again climbs above the 20 and then trying to maintain another range. If that's going to happen, then you have to be cautious. As long as it is between 15 and 20 that levels, it should be good for trading and it should be good for the markets, right? Now, open interest analysis. This is for February 3rd, this Thursday, 2022, expiry, weekly expiry, and 16,500. This was 16,000 earlier with the maximum put rating was this. Today it's 16,500, so the range is reduced a little bit. And 17,000 also has got good put support. Now highest writing of calls is happening at 18,000. It's quite far away. That means market people anticipate that it can further tomorrow also, it can, for this expiry also there could be volatility and it can move more than 1,000 points on either side. Or downside, people are expecting it to fall. That's why the potential is more than 1,000 points downside. Only 500 points on the upside. The fear is there. So 18,000 highest call rating, 18,500 also is next highest. 0.76 is support call ratio is not clearly bullish but not bearish also. Long build up happens with the futures operator setup. Bank Nifty 36,000 maximum put rating, 40,000 maximum call rating, 38,000 also has got enough put rating. Then the support also the resistance also can be seen at 48,000. 0.070 is also not clearly bullish but not bearish either. Long build up is what happened to the futures operator startup, right? So that's the operators analysis. Correlate these levels with the support and resistance that we talked in the previous chart, and then come out with portion swing trades. Now look at the heat map. It's almost all are green except few small, less relevant, less weightage stocks are red. Otherwise, the major players, HDFC Bank, ICICI, Infi, basically IT has done a good job. So all sectors except energy and fertilizers performed today. Sector analysis, if you see major sectors, IT gapped up 1.5%, metal gapped up 4.5%. Metals, some policy related news came in, and then that's why 44.5% jump happened. Auto is also nearly 1% up. For auto is the only sector which is red, which is 1%, no, nearly 1%, 0.75% down. Farmers gapped up 2.2%, FMCG gapped up 2%, realty gapped up nearly 2%. So all sectors actually gapped up, and momentum has turned into sideways from the bearish zones. Now everything is sideways. Sectorial recovery has happened from the bearish zones clearly, but auto was, which was performing all these days. Now today there was a slight dip that happened for some reasons. So still have to wait for the momentum to catch up to enter the bullish zones before you can take a top-down approach based stock picks from the sectorial watch. Now institutional participation, today's data is not down out, but as of yesterday also heavy selling happened from the institutions. Therefore yesterday, last 7-8 days it has been heavy selling by the Fyers, although in institutionals from the domestic institutions are buying, but not as much as the selling is happening actually. Yep, so today's also big selling might have happened from the FI most likely, and then big buying also might have happened from the institutions. That's the exact data is you'll have to see tomorrow or later. That is not out yet. Now dollar has due to some bond price policy related news, I think today it shot up with although the US dollar index is cooled off, the USD INR has shot up after a big fall back to support zone. It seems to be spiking up again. Now again heading towards the 75 levels, which is not that good. But your currency is seen to be falling off in the last 2 days. The USD currency index. Crude oil is still at a very high level of 86.87 kind of levels, and it's expected to further go up looking at the momentum, which is a real concern for our economy. Gold, again another attempt seems to be in the making to hit the channel top once again and probably break out above the resistance on of 1876, where it was getting tested multiple times in the last 2 years almost. Right, so US market seems to have recovered its greenery that is seen. We'll have to see that the pre-market tomorrow, because markets Drawdowns has not opened. Others will come to know how it performed only at the end of the day. That's tomorrow morning our time. We'll have to check that. But looks like there was some green candles on Friday, and recovery seems to have bottomed out, and then recovery is in progress is what we can understand from the charts of Dow Jones, Nasdaq, and S&P 500. But the markets also show some greenery as of now. Actionables to Canara Bank weekly chart is what you see here. Rounding pattern breakout. The resistance are seen at 321, so that's 50 good points. It may go up to that level, and then we push. This can be traded for personal swing trades. Even India hotels also in a trending and rounding pattern breakout is happening. Good volumes, momentum, and ADX is excellent. And this is weekly chart. Definitely daily is also bullish, but patterns is in the weekly. That's why it is posted. So both of them have got good momentum and trend, good price action, and then volumes also is decent, right? So that's Canara Bank and India Hotels. India Hotels is the Tata Group concern. This is another view of the market, right? We'll come back to this when we're discussing the wrap up. So wrap is mild bullishness in the short term. So that's based on the momentum, the trend, both crossover to sideways happened, support resistance levels, price patterns, Bollinger bands, Bank Nifty strength, all of this combined, it gives me a view that markets we have to be cautiously mild bullish. But the concern is the institutional selling, right? Sideways price action as well, Bollinger bands is swing. Now the major event is over, so the focus will shift to the US markets. If that continues to recover, then it will be no problem in our market too. Furthermore, as the outcome of the budget is seen in a positive way by the reaction by the market was positive, as of today. But if the global cues don't have any concerns, then there should not be any problem to break out of the resistance. But the positive factor is that 20-day MA and momentum is magnetically showing great strength, right? Volatility has cooled off. These are two great things, right? So also post budgets also it may take sometimes a whole month of February, or sometimes few weeks, or sometimes few days. There will be a trend that will be forming either upside or downside. So clear trend emerges. So we have to identify that the trend is happening or not before taking positional trades. Intraday always use vertical as I say, counter spreads and head strategies, and risk defined strategies has to be applied. If you are carrying forward, intraday always put straight stop losses because volatility is still at the top. So you got to be cautious, for intraday play with tight stops, right? So that's a view. So just to correlate, just to further strengthen the view, it will be helpful to look at these charts, right? So this is the 20 DMA, this is the 50, 100, and then 200. So you can see that the 50 has been cleared, no 100 is there ahead at resistance. So this entire area is a confluence of several resistances. Of there's a gap here, and there is a moving average 20, moving average 50, moving average 100. So all this confluence of resistances, whether it will be able to clear or not, it will be clear only if it is a green close above the 17,800. We'll have to wait for that. That's the state of Nifty. But it's a sideways price action. Sideways momentum is what is happening. So if there is no other issues, market should easily be breaking this and then going further up. But if the resistance cannot be is catching, then it could mean it could mean a further drop back to make another swing low, right? So that's something that we have to be concerned, worried about. But the good thing is that Bank Nifty is, today touched the bullish zones in the momentum, and also it is clearly taken away all the moving average, and then even the 20 moving average also is taken out, and then it seems to be heading strong to break the previous resistances that is there at the 39,000 kind of levels, right? So that gives Bank Nifty gives some hope, but institutional selling, is fearful, and otherwise the view remains mild bullish based on the price action, momentum indicators, trend indicators, and the support resistance levels, right? So it all depends on whether the global cues are also not creating much problems now that a good correction has happened there. So that's the view overall. I hope it helps to frame your view for tomorrow. If it helps you in some way, please share it to your friends. Subscribe first of all if you're not done, and consider hitting the like button, and then we have few subscriptions, and the more subscriptions will be more motivating for us. Thanks for watching. Happy reading, happy learning. Bye.